IPL is back. Excited to see who lifts the trophy? What if you could also learn investment lessons from the game? Join our quick webinar, How to Chase Your Investment Goals Through Mutual Fund the IPL Way, on 17th May at 10 AM. We also have another exciting session at 1:30 PM. India is booming, but want to know, is it a right time to invest in India? Join our webinars and find out. Don't miss it. To register our webinars, please click the link in description and bio.
In this video, we're going to talk about how to rebalance a loss-making portfolio. It's tough to rebalance your portfolio when it's in the red, and this is a market where we've seen a lot of red and green shift very swiftly, and a lot of investors have been wondering about how to position themselves for the next few years. So while it's tough to rebalance your portfolio when you're making losses, and it might seem like a difficult decision in terms of taking those hits, it's worthwhile to think about what we need to do and how we need to do it. So we thought this would be an interesting juncture for us to share 3 strategies that can help you make the right choices for your portfolio. So the first strategy that you can apply is to take a long-term view. If you're able to take a view beyond the next year and look at maybe a 3 to 5 year horizon, then it gives you a lot more clarity as to what you should hold and what you should exit. Many of us have entered certain investments anchoring recent returns in our mind. So we've seen the past 1, 3, 5 year returns and hope to achieve the same thing in the next 5 years. However, often this does not happen because every phase of the market cycle has a new set of winners, and we've clearly moved on from the last phase and are heading into a new phase. So keeping this shift in mind, we need to realign our portfolios to the future. The second important thing for us to do today is to work on asset allocation. This is something that often goes unnoticed and doesn't really get the kind of attention that it needs because there is a perception that you don't really need asset allocation, especially if you're an aggressive investor. Yet asset allocation works really well for both conservative as well as aggressive investors. Conservative investors could stick to a strategic asset allocation where they apportion a certain amount of their assets into equities and the remaining in safer assets like fixed income or precious metals. Keeping this in mind, it allows them to balance out their profits that they make from one asset class into another asset class which has a lower or cheaper valuations. So this kind of rebalancing ensures that the investor manages risks and books profits at the right time. If you're a more aggressive investor, you could look at tactical asset allocation, especially in today's context because you're seeing relative valuation in more conservative asset classes like fixed income and precious metals outweigh the benefits of owning aggressive investments like equities. So this shift from owning just one asset in your portfolio or having a heavy concentration towards one asset to a more diversified and balanced approach could actually work out very well for an investor. This might mean taking a hit on certain investments, but it also prepares you for performance from your new investments that you make. The third strategy is to work with markets. This means you can track what's happening in the markets and understand that even in a tough year, things are not always moving in one direction. You're going to have ups and downs, and if we just look at how the Nifty has been through 2025, there could be no clearer proof of the fact that markets just don't move in one direction. So if you thought that you had a prediction for the way markets would be, in January, it looked like markets were going to be weak for a long time. You had a month-long drawdown that happened in the markets, but then you saw some recovery and promise in early February before the markets again tanked and reached a bottom in March. From there, the markets recovered very quickly, only to fall again in April and then zoom up again towards the end of April. So it's been a roller coaster ride, and it is a phase where you're seeing ups and downs. So when we're able to work with the market, this means when you're seeing the markets move down or your portfolio reduce in valuations, then that's a time for you to start focusing on your buying and building positions. So this means having adequate liquidity in hand so that you can participate when the market is in a down phase. The other way to look at it is that when the markets bounce back, you need to do that restructuring. And even if the bounce back happens, but your portfolio is a little bit in the red, you need to overlook what's happening and focus on the future that you're trying to create. Rebalancing your portfolio is like de-weeding your garden. This means that you have to take out things that are not working for you so that the things that are working for you can bear the right fruits. You can do this very easily by talking to a professional and getting an opinion on what needs to be removed in your portfolio, what needs more attention and growth, and where you need to refocus your energies and resources. This can be a very rewarding experience for an investor, especially in a volatile year like 2025. And this is something that you should do right away. So if you would like to know more about how you can work with a professional, then get in touch with us and we'll be happy to help you. You can reach out to us at 9500027285.